Russia is now banning commodity exports. That's their part of the sanctions, I guess. Not necessarily uranium. We don't know at the time of recording of this video, but maybe down the road, who knows? Maybe down the road they want to close off all exports. Who knows, right? But so what do we have right now? As I told you at the beginning, gas prices are through the roof. Oil prices all-time highs, but uranium is lagging. Wow, by the way, before this happened, I think you can still look it up on worldnuclear.org. Russia was actually planning on increasing uranium exports for, as you said, for the front end of the fuel cycle. Now it's going to be cutting back on that, potentially, killing it off completely for at least until the end of the year. That's what they're seeing right now. So what does that specific thing tell you, Justin?
Well, I think it's definitely shaking up the nuclear fuel market. I think that it's difficult to speculate on exactly how this will be impacted, but there's multiple layers to it. I think if I were to summarize all of it, I would simply say that there is huge new risk associated with Russian uranium that was not there even 3 weeks ago. So, and this is a big disruption potentially to the nuclear fuel market. So you have the potential for actual sanctions still there, right? The US is talking about sanctioning oil from Russia. They have made an exception for uranium, but a number of people pointed out, well, doesn't that actually make the point that uranium is crucial and that's a leverage point for Russia? I would argue absolutely yes. Like you mentioned, we were hearing that Putin is saying that he's planning on banning exports of all raw materials outside of Russia until December 31st of this year. We have not yet heard if that is officially going to happen and whether or not uranium is on that list. We don't know. Clearly, that type of rhetoric coming from Russia has the nuclear fuel market concerned, and we're seeing the reactions to that already. Like I mentioned, speaking recently with John Ciampaglia from Sprott, he's seeing even within the past week, the U3O8 market tighten significantly. So in terms of pounds being sold into the spot market, that's already, I don't want to say drying up, because it's not that the pounds aren't there, it's that the sellers are being more reluctant to sell, even in this rising price environment. And he said that, they're kind of the primary buyer in the spot market right now. And so they don't have to go looking for it. Their phone is ringing. Okay, when somebody has uranium to sell, they get a phone call. And he's basically saying that that's dissipating. Sellers are holding on to their U3O8. Because the SPUT is not buying UF6 like Uranium Participation Corp was buying both U3O8 and UF6. It's purely U3O8 for SPUT. So there's a number of layers to the potential implications of Russian uranium being cut off, and also even if it's not cut off, what we're already seeing. So we saw the corporation Maersk, who is the largest international shipping company in terms of container shipping, say that they would not be delivering to Russia. And so Kazakhstani uranium goes through Russia for the most part. They ship out of St. Petersburg. So that has the potential to disrupt shipments of even Kazakhstani uranium. Now, even if that does, technically, Kazakhstan could do swaps with China. So China holds inventory all over the world. So they could sell uranium to China and then the Chinese uranium swap for that buyer. It's a little bit complex, but it's something that could happen as a workaround. Either way, we're hearing whispers that it's potential that shipments coming from Russia, we could even see like longshoreman strikes for ships that are arriving in the States. Even if that material isn't officially sanctioned, we could have longshoremen refusing to unload that material. The long and short of it really is that, okay, so Russia provides over 40% of the global enriched uranium. They're a huge producer of enriched uranium. They're the biggest enricher. And so if Russian enrichment is cut off or at least out of favor, because that's what we're seeing right now, is not necessarily that material being officially cut off from government sanctions from either side. We're actually seeing the buyers go, gosh, I mean, if I won't be able to get delivery of this for 2 years, I'm not going to sign that contract now. Why would I do that? Even if I won't have the government necessarily telling me now that I can't do it. What's going to happen between now and then that's going to disrupt that delivery? So even if a contract is current and is good, if that delivery is cut off, then you're out of luck and you have to source that material elsewhere. Man, there's so many layers to this. Russians have sold future enrichment. They've signed contracts, future underfeeding, excuse me. They've signed contracts far out into the future. And this is a detail that came from Art Hyde from Segra, who knows this market extremely well. The Russians have calculated a certain amount of underfeeding going out into the future that they have sold into the market. They've sold contracts for that expected material. Now, what you'll have if Russian enrichment is interrupted is you'll have greatly increased demand at all of the other Western enrichment sources. And so what that means is all of those enrichers will essentially have to overfeed their centrifuges in order to meet that greatly increased demand. So that has a knock-on effect of increased demand for UF6 and U308. So it's all interconnected. It's all very complicated, but this just goes to show you how unbelievably important security of supply is to utilities and how unbelievably fragile this market is with over-reliance on a couple of very small but important jurisdictions for production of uranium.
That was going to be my question. And when I opened my mouth and I wanted to say something, that would have been my question about the SWU prices going up. What does that mean? And I'm really thinking, being here in Europe, I think Europe is really the one that will be hurt the most by Russia banning exports potentially. Is most of Europe is heavily dependent on Russian gas, specifically Eastern Europe countries like where I was born in Bulgaria, 100% reliant on Russian gas. There's a lot of Eastern European countries 100% reliant on Russian gas. I think it's only Spain and Portugal that import their gas from Algeria, but even large countries like Germany depends for over 50% of its imports on gas from Russia. And experts right now have foreseen that there is enough reserves to go as this winter, which is pretty much done because it's almost March, because it's already March, and next winter, basically. So this winter, next winter, we're going to have enough gas. But after that, they literally said that we'll have to get entrepreneurial, we'll have to get creative, stuff like that. That's the wording that they use. What do you think that means as getting creative? Would countries like Germany do a U-turn on nuclear? Because we're seeing, at least on my end, I'm seeing Belgium sort of being like suspicious of their decision to ban nuclear by 2025. They have not yet backed down on it, but are they going to do it? Is Germany going to make a U-turn? What do you see of the geopolitics on that?
I never hold my breath with Germany. But seeing that at least sentiment shift there is a positive thing. We've obviously heard they keep going back and forth. We hear that they're considering extending the lives of the 3 remaining reactors that they have online currently that are set to close, I believe, in December of this year. And then we hear 2 days later that that's off the table. So I don't really know, but they clearly have been put, along with multiple other countries in Europe, to your point, in a very precarious position, being so dependent on imports of natural gas. And of course, these countries would also be dependent on imports of uranium. But the issue with the benefit of nuclear and uranium is that it's just so incredibly energy dense, and you can store years and years and years and years of fuel for that electricity production in a very, very small area. So you don't need this consistent pipeline of fuel flowing into the country from a country that might be your adversary. You can actually source uranium, all elements of the fuel cycle, from various jurisdictions around the world, including allies of Europe, and allies of many of the countries in Europe, I should say. Shouldn't lump all countries together in Europe. But the fact that you can have just consistent baseload power with a highly concentrated fuel source that you can source from allies. And I think that clearly the sentiment on nuclear is shifting, especially in this time frame of energy insecurity.
Well, and maybe this is not even only specific to uranium, but do you think that the markets of pricing all of this in that you just told me? Like, is uranium pricing in the ban of exports, the potential ban of exports? But is the S&P 500 also pricing it in? Because this could lead to much higher costs for companies, which kills off their margins, if they even have any margins. And this also, it would make banks more reluctant to lending them money. It would put a strain on the money supply, even the economy. It could totally destroy entire companies because of this, right? And I'm not even exaggerating, right? A lot of these companies survive only because they have access to cheap or free money, because every bank is just lining up to lend it to them. But if the risk increases and if their potential margins drop, if the value of their collateral drops too, they might be more reluctant to lend the money. But so, do you think that's priced in somewhere in the markets out there? Is uranium pricing it in? Is the broad market pricing it in? What do you think?
I think that the uranium market is starting to price it in. It's starting to recognize the implications of this situation, and not only of this present situation, but the potential long-term implications following this situation. The market was already tight before this happened, and this is just kind of hurrying things up, in my opinion. And so relative to the S&P, we're actually seeing outperformance by the uranium equities for a couple of weeks in a row now. It looks to be completely decoupling. We're seeing historically large down days in the S&P, 2 to 3%, with the uranium equities up. That was something that's completely out of character for uranium, especially when the spot price isn't moving. So the spot price moving helps. I think that uranium investors are growing in their understanding of what this means and potentially could mean for the sector in terms of Russian uranium being cut off. So it's not something that we're betting on happening. And, we have our investments based on the classic quote unquote supply demand fundamentals, and the growth sector of nuclear really is the core of our long thesis. But this is one of those force multipliers where you have, the fragility of the uranium market, I would also argue, was and is a big reason to be invested in the space, because it just takes one exogenous event to create this disruption. And so is it pricing it in? It's starting to recognize the potential. Is it priced in? Absolutely not. I think the big issue with Russian uranium products is that their primary product of enrichment is towards the end of the fuel cycle. So when you have a disruption to U3O8, there's a long-term, that obviously has effects, and the market recognizes it. For example, with, Cigar Lake closing due to COVID, the market instantly reacted to that. And part of that was, Cameco had to buy in the spot market, which moved the spot price. But, this is why you don't see an immediate panic on the part of the utilities, because most of them have inventories that are sufficient to buffer a short-term event like this. But even with those inventories, so in the US, it's around 2 years. The EU is a minimum of 3 years inventory for nuclear utilities. But what you have is something like this that can have knock-on effects for years. It can take a very long time for supply to respond to these sort of situations. It can take years and years for first of all, if you see increased demand from the Western enrichers, which we likely are going to see shortly, even if Russia doesn't get cut off, you're going to see, like I mentioned, the knock-on effect of increased demand for UF6. Well, there's still no conversion in the United States. ConverDyn closed Metropolis back in 2018, and that's not set to come online until next year. So you're going to see a squeeze on UF6. And that's going to create, a squeeze on U3O8, and it just moves down the fuel cycle. But to your point, that's another layer to all of this, is capital concerns. I don't know how soon you're going to publish this, but on the 11th of this month, is when SWIFT is getting cut off to a number of Russian banks. So there's obviously concerns with a lender. Are they going to want to fund a purchase of uranium from Kazakhstan or from Russia? Definitely not from Russia. Kazakhstan is still, at this point, still relatively neutral in this, but I think that there's some risk concerned with that jurisdiction as well. So, there's just so many elements to this that are far more complex than simply, will the US sanction it or will Putin cut it off? Those two things in my opinion, are far less likely than these other knock-on effects of shipping being impacted, of utilities just not wanting to take on the potential risk of financial risk from lending, all of these things, the capital markets. It's like, it's a very messy situation for a very fragile market.
It's also very interesting, and there's probably a couple of ways, several ways to go with this. Really, what you've just told me, with everything that you've told me today, but I guess also because we sort of constrained by time, I cannot stop thinking about what does all that mean globally as one thing. Like how do you translate that into your strategy by which you approach your uranium investments, I guess. And what does that mean for small retail investors like myself? What do I do with all that complex information, like globally? Do I ignore it? Do I base my investments on it? Have you changed something with it? Like, I have a lot of questions.
We haven't really changed the way that we're exposed to the sector. Our most recent trades have been cashing out and then putting on new options trades. So we're seeking leverage in that way, in addition to our equities holdings. In terms of the Russian situation, like I mentioned, we aren't really trading around this. This is, for us, this is kind of sort of gasoline on a fire. It was a market that was poised for disruption, and we didn't know where that disruption would come from, or necessarily that it would come from, but the market was ripe to be disrupted because of its fragility and its over-reliance on very few jurisdictions globally. And considering that, when you compare it to the fact that the sector is growing, that we have a number of countries, like you mentioned, in Europe, kind of doing an about face in terms of nuclear shutdowns, in terms of, I just saw that the South Korean president had just been elected. He was the most pro-nuclear of all of the candidates, which all of them were pro-nuclear, but he was the most pro-nuclear. South Korea could do an about face and not only extend the lives of the reactors that are there, but maybe bring some new builds on. SMR revolution. I mean, the overall fundamental landscape is quite bullish. And when you compare that to the fuel cycle that is crucial for the functioning of nuclear globally being fragile and ready to be disrupted, well, now that disruption is potentially here. And so we're not, like I said, we're not trading around this. We're not aiming to try to sell the quote unquote Russian frenzy spike that may come and enter back in. We still have a mid to long-term outlook for this market for a number of years. So we're just holding long. We might trim on euphoric spikes, but for the most part, we're kind of at on weakness and hold, and we'll continue to play it that way for the foreseeable future. Even at this price environment, with the good move that we've seen in the past few weeks, $50 a pound, we think that's going much, much higher. So we're not looking for the exits anytime soon.
Those were just something that I wanted to ask. So this hasn't changed your opinion as to where the market could go, how long it could stay there, or any of that. This, the political happenings haven't really changed your opinion on it, have they?
It's a moving target. The information is so liquid and it changes so often. So we try to stay on our toes with this investment. I can't tell you exactly when we'll be exiting. That's something that we will have to adjust as we go through this market. But I mean, nuclear, the outlook for the growth of the nuclear sector has never looked better. So I do have confidence in a long-term bull market. That's not to say that we couldn't see big disruptions of the fuel cycle and an absolutely aggressive move by institutional players coming in to buy physical uranium and send this thing on a moonshot in the next 12 months. I mean, that could happen. So that's something that is on the table. And we just, like I said, we watch every element of this trade on a daily basis to try to stay on our toes, to time things as well as we can. But as far as the long-term growth for nuclear, it looks spectacular here. So the short answer, I don't know. But it could be a shorter investment at this point. It could be, if things get wacky here, which they could. But it also could, this could spike and come back down, and then we continue to grind higher on a slower pace. I don't really know.
Okay, well then this makes it necessary for you to come back again and